The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 30th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential, because living up to our potential is what we must master each and every day. So let's begin our day with an empowering belief or two. You know, beliefs, folks, have the power to create, and as well, they've got the power to destroy. We, you and I, we have the awesome ability to take any experience of our life and create a meaning. That meaning that we can create, it can either disempower, or better yet, it can be a meaning that empowers you no matter what it is that happens. One can literally change their life just simply by changing the meaning of an event. Look, what we can or we cannot do, what we consider possible or impossible, is rarely a function of our true capability. It's more a function of our beliefs about who we are. Destroy your disempowering beliefs, folks, because you can do anything out there. So, let's go take a look at these markets here. They can do anything as well. Right now, we've got the Dow off 77 points, trading at 14,742. S&P trading at 1587. That's off 6 points here right now. Composite down 4, about 5 points, trading at 3302. Russell down 3 points. The Dow leading the charge to the downside. Google's up $2. Apple's up 4. Microsoft is down 2 ticks. No big deal there. That stock has been very impressive the last several days. Intel down 3 ticks. Cisco off 6. Leading the charge to the upside here, you got Oil States International up $11. That is up. The OIS, that is up 14%. This morning, Hardware International up $9. That's up almost 11%. MasterCard, I believe they're out with earnings tomorrow or the next couple days, but MasterCard is up $7 and change out here. That's up about 1 3/10%. You've got Chart Industries, GTLS up 6%, up 470. LinkedIn having another nice session, up $4. Group CGI Inc. up 12%. GIB is the ticker symbol. To the downside, MicroStrategy Inc. They're off 11%. Cummins Inc. off $5. That's down almost 5%. Innofos Holdings, IPHS. Let's go with their ticker symbol. That's off 8%. Nuance Communication getting hammered this morning, down 18%, off $4. Marathon Petroleum, MPC, off $4, 5%. Buffalo Wild Wings, after being up after earnings last night, now down 5%, down 4.5%, off $4. Teleflex, TFX, is off 4%. Rand Gold, GOLD, down 3.5%. We'll certainly take a look in on that. Flowserve off 258, down 15% this morning is Pitney Bowes. Pitney Bowes here trading down $2.50. Our call number is 877-927-6648. So we'll start off right now by taking a look at, with the market being down, let's go take a look at the EKG of the market. I consider that to be more of the shorter-term charts out here. So we're going to take a look at the ES Mini and see what that is doing. Now, as the ES Mini yesterday made a high coming into the 2:30 time frame, the high that it got up to was 1592.25. It was also making a 1.272 butterfly expansion. That butterfly expansion coming off of a swing point here at 2:30 in the afternoon on April 25th. The high was 1588.25. Your low down here was the low at 12:30 on April 26th. That low being 1572.50. That was your A point of an A to B equals CD. Your B point on this happened to be the high at 2:30 in the afternoon on April 26th. Makes an 84% retracement, coming down into the low at, 8:30 in the evening on April 28th. Down there at that price point of 1573.75. Makes an A to B equals CD. That's what you need to have inside any type of a Gartley or butterfly pattern out here. And makes an expansion of that first swing point. X marks the spot. That was the number of 1588 a quarter at 2:30 in the afternoon. That was the high all the way down to the low. That became our A point. That was the low coming in at 12:30. 1.272 butterfly is what was created. If you go back a little bit further, there's another 1.272 butterfly up at those highs. If you go back a little bit further, there was a 1.618 butterfly coming up at those highs. So on the ES Mini, on the 30-minute chart, on the EKG, you got a lot of butterflies in your belly as this is making highs out here. Now all you've got is a butterfly pattern. You also had that very, very significant reversal candle formation. That's what I call the hurricane pattern up here. A hurricane pattern is at least a 4-candle session. Here you can see coming in at 2 p.m. at 1400 hours, what we'll call somewhat of a wide-ranging bar, then 2 small-bodied candles, 2 kind of spinning tops, if you will, and then boom, 1 wide-ranging bar to the downside. The key here, the mere fact that the close of that bar at the close or lower of the session that we began with here at 2 p.m., that creates that little hurricane. And hurricane forecasters say, well, what you're going to do is you're going to do a retracement, typically a 0.618 retracement of that entire move. That would take you down into about 1580. Well, so far what we've seen here is we've seen a low of 1581.25, so pretty darn close out here. We did see volume, though, increase on the way down. That volume coming in from that 9:30 to 10 o'clock session. That was with 206,000 contracts to the downside. Yesterday, a day of cheer out here, and the day of cheer, and where it's trading into right now, only had 142,000 contracts to the upside. So what we continue to see here is a market, no matter what time frames, no matter what it is that you look at, each just simply having volume to the downside versus volume to the upside. That is an important thing to be paying attention to. So that's what the ES Mini is doing, nothing more than a normal retracement here. If we take a look at A to B equals CD, we've also got that pattern in place. We started our swing point high again on the 30-minute chart. Folks, this works on all time frames, no matter what it is that you're doing. In this case here on the 30-minute chart, you're using the high that came in at 230. On the ES Mini, that's 1592 and a quarter. That's your A point. Your B point down here is going to be, we'll use the low. Let's see, what's this low here? That's 1586.50 and 1586.50. So at about 11 o'clock last night, 1586.50 is the low. That becomes your B point. Your C point was the retracement up into the high at 3:30 this morning. That was 1590. If we take a look at the B to C retracement there, so if we measure that and we take a look at it, of course, folks, how does this work? The 0.618 level, 1590. What does it actually get up to? 1590. 1590 was the actual high, coming in at what time was that? 3:30 in the morning out there. So nothing more than a normal retracement. Now what you've seen is what we've done, what this has done. It's done the 1 to 1.272, almost 1 to 1.618, right at that 1580 level. That is on the 30-minute chart of the ES Mini. We can dive down just a tad further. Let's go into the 10-minute chart out here. Let's go see if we can see. That was not what I was actually intending to go to. That was the ETF structure. Let's come here. As we take a look at the 10-minute structure here inside the ES Mini, we can see that same move down. We can see the volume. Right now you can see the bulls trying to mount a little bit of a charge here with a little bullish engulfing. If, as we come into the 10:20 a.m. session, what you have is a close at or above 1583.50, you'll have your first bulls here showing up for work after the down thrust that began at 9:50 this morning out here. Of course, if those bulls don't show up for work, and you can see you're coming into the oversold territory on the ES Mini out here. So this just helps you to understand what's going on inside the ES Mini more on a ultra short-term basis out here. You got to wait for bulls to show up before it gives you any kind of indication that the move to the downside is over. What do I expect? What I expect here, if we take a look at this butterfly pattern, even if this thing moves down to the 0.786 level, that would be about 1576.73. The ES Mini on the 30-minute is going to be very much in the oversold territory, and I suspect 1576-ish should hold as a pretty decent level of support. Now, the key is going to be, is there going to be any bounce? Is that going to be a buying opportunity? And that will be key. Or is that simply going to be an opportunity if the market moves down to that area? Is it just simply going to travel sideways and work off any kind of oversold condition? So we'll just navigate the waters here, and we'll just navigate the wind one thing at a time. Now let's go take a look at the daily charts. We'll go take a look at the indexes. We'll start off by taking a look at the S&P 500. S&P 500 right now trading at 1588.26. Really no big shakes out there. Now, if you put this on the daily chart, we'll see that the swing point high here, which the S&P is still trading inside, is April 11th. The low there, 1586.17. Let's take a look at the low so far intraday, 1586.50. So the S&P has not even pierced 1586.17. You don't pierce that area. You trade inside that candle. What does that really set up? That sets up a test for the high, 1597.35. That is still game on there. You have not broken through that swing point. You have not rejected, not you, but the market itself has not rejected that swing point. So it hasn't rejected that swing point, says it can go test the high. The high, 1597.35. Yesterday gets up to 1596.65 out there. So that is absolutely still in play. Let's go take a look at let's go over now to I'll go from the index to the actual ETF structure. That way we can take a look at volumes and so forth and try to put this, paste this picture together. Now, we're going to look at the same swing point high. That's going to be the April 11 time frame. That swing point had 110 million shares. The top of that was 159.71. Yesterday does not get up above that. It gets up to 159.65. Volume, though, yesterday, 88 million shares. 88 million shares versus 110 million shares. Yeah, I don't think so. Now, what has it done today? The low of that swing point from April 11th is 158.54. The SPY has gotten down to 158.61. So it has not even also tested or broken through there. Right now, all that the SPY is doing is having an inside day. The SPY, the S&P 500 is having an inside day. The moves inside, the intraday move inside the 30-minute chart on the ES Mini, doing its normal task out there after it made, a butterfly pattern. It's got some pretty stiff resistance up at the highs there, if you like those butterfly patterns. And so the SPY here, of course, what we do know about the SPY is you got this day right here, April 15th, tax day. Was everybody was everybody selling on that day just to be able to pay their estimated tax payments and their taxes out there? I know there's a lot of procrastinators out here, but I don't think so, and it really doesn't matter. And it really doesn't matter because you had volume off of the top here inside the SPY, 216 million shares to the downside. That's after moving up with 130 million shares on April 25th, and then yesterday, lighter volume as it tries to move higher with 88 million shares. I don't think so. Now let's go take a look at the Dow here. We'll go take a look at the Dow, then we'll go back into the diamonds and see what the diamonds are doing. So as we take a look at the Dow here, we can see the Dow is truly a weak link. So let's go see if we can learn anything from the Dow Jones Industrial Average. It's trading out at 14,743 right now. We come back from this break here. We'll go take a look at that dark cloud cover that it has created. Of course, we know that this has the big hurricane pattern right up here. The Dow has made a significant reversal candle formation. It did that on April 15th. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 70 right now. S&P is down 5. Russell 2000 a week link is actually kind of strong out here. It's only off $1.21, off about a little over 0.1% out here right now. So on the Dow here right now today, the candle pattern, if it were to close like this, is a little dark cloud cover, but not to fret. Your key here on the Dow that you're really paying attention to is going to be the hammer candle. That's the April 19th level. So if you're long and strong in the Dow, it's really no problem. I don't see an issue out here other than we're coming in to sell in May. But the real key here, and you got to give this a little bit of room to run, is going to be if that hammer candle from April 19th gets taken out that low, 14,444.03. That will tell you that where you're going to take heat then to is going to be coming down into the February 25th range. That'll be into the 13,784, but more likely coming all the way back to December 31st to January 2nd out here. So no reason to run here just yet, but do make sure that you've got some stops in place. You get a break below, a close below 14,444, and you got to determine whether or not you want to take a 300-point move to the downside out here, whether that's where you want to have your stop. But that's where, at a minimum, from the longer-term side, you'd want to be paying attention to the Dow. Let's go up to Mark in Concord, Massachusetts. Mark, thanks for calling. Thanks for holding. How are you today?
I am fine. A nice, sunny, beautiful morning up here. I am not going to complain one iota.
Oh, that's great. That's great. You were calling to talk about your favorite thing.
I had a question on the famous S&P 500, which which maybe you partially have clarified it in what you just said, but I wanted to double check.
Yeah.
Okay, you had said that the S&P needs to get to 1597.35, and Tom last night said the same thing. It needs to test that, get over it, then close under it. Now, my question is, a few moments ago, you said that the Dow has made an island kind of reversal. So does that
an island reversal? What I call the hurricane pattern.
Okay, so I guess the question is, it sounded like you were saying before you went to the break that the Dow was going to come down, but then you mentioned that maybe the Dow is going to go up, and that you also mentioned that the S&P needs to get to the 1597.35 level. So I am, in one word, confused.
Okay, so here let me try to I'll do the best I can to unconfuse you. First, we got to take a look at really different time frames. So I know that you and your buddies are always wondering about different time frames. So I'll give you my call on the different time frames.
Yes, but also, Steve, some of my friends are very non-technical.
No problem.
That's probably more important. That's probably more important than anything else. Is that math to them is a four-letter word, and 1 plus 1 to them is 1 plus 1 to them is like 6.5.
Well, I'll give you the non-technical term.
Okay.
On a longer-term basis, over the course of the next several years, the S&P is going to move up to 2350. You're at 1587 right now. So on a longer-term basis, that is where the S&P is headed to. On the shorter-term basis, on the intermediate-term basis, on the what I'll call the weekly basis right now, I believe the S&P wants to start pulling back to 1469. Right around that level. May pull back further. That's the first level that is going to pull back into. 1469, 70, not right to the T. So there's going to be a pullback inside the S&P. It's going to be a nice pullback out there. Maybe it pulls back a bit further. We're coming into that cycle of 6-month seasonal cycle of sell in May. We've got more stocks over their highs than we with lighter volume than I think we have in 5, 6, 7 years, something like that out there. That's not a good sign. That's not a positive sign. So that more intermediate term basis, that's what I take a look at right now. On the shorter term time frame, which we'll call the daily. On the daily, while you trade inside a swing point, and right now the swing point high in the S&P 500 is a low of 1586.17 and a high of 1597.35. If the S&P closes inside that, then what it should do is a natural thing, which is go test that high, 1597.35. If it tests that high, if it closes back below 1597.35, it hasn't violated this very significant reversal candle formation that's out there. All it would really be would be just a test. And that's the non-technical, as non-technical as I can get with regard to my belief of where the market will move to. So I see longer-term picture. I see, very positive things inside the S&P 500. There are patterns that existed at the 2007 highs, at the 2000 highs, that aren't present at the current time. And so, therefore, I don't think that we're going to see a rush all the way back down to the lows in like we saw back in 2009 out there. Does that help at all?
It does. Can I hold through the break and give a
you
follow-up?
Can. Absolutely. We're going to let Mark hold through the break here. 877-927-6648. Dow is off 78. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the Money Masters Show. Folks, Dow's off 62 right now. S&P is down 5. We're going back up to Concord, Massachusetts. Starman Mark, we're talking about the S&P 500. Take her away, Mark.
Okay, so I guess the question is, Tom was talking about last night. It gets to 15, whatever it was, 15. What's this one?
You're talking about the swing point high.
Yeah,
I think on April 11th, which would be
right,
1579.35.
Right, and Tom was saying, if I remember Tom's show last night, he said, you get over that during the day, you close under that, and then then we're gonna come down. And he occasionally uses the analogy, everyone's going to try and get out, and the doors are only going to be so wide at night, everyone's going to get out. And
sure.
Is that going to happen here, in your opinion? That we're going to have a pretty good correction if we get above that and then come down, or are we just going to bounce around this trading range for a while?
Well, at the moment, I believe we are going to have a correction, and it's going to pull the S&P back down to at least 1469. It's at 1588, so that's 130 points right there. Yeah. So that would be a pretty decent correction. That only brings you down to the 200-day exponential moving average. Moving down to that is really no big deal.
Okay.
Again, it just really depends on your time frame and where you're at in your trading. But a pullback to a 200-day moving average really isn't that big of a deal. Now, it's a 120-point drop. My preference would be to be on the short side of that on at least, depending, most people should have long-term funds, maybe intermediate funds and short-term funds. So it just depends on what you're doing. If you're, in your long-term funds, your exit strategy should be different than your short-term trading.
Right. Okay. That's good. All right.
There are different studies. It really depends on your flavor, what it is that what you're really trying to accomplish, how you want to manage your money. If you're trying to always buy a bottom and sell a top, you're going to drive yourself absolutely crazy out there.
Well, Larry Pesavento, one of the first things I've learned from Larry was you never try and buy at the high. You never try and sell at the high. Never try and buy at the low. If you offer a few pennies, it's not a big deal.
Yeah. I mean, So that's why I say that. Look, right now in the S&P, it's really clear because it doesn't matter whether it's the S&P or anything else that we would look at. When you trade inside a swing point, in this case here in the S&P, it's the April 11 swing point. In the lows, 1586.17. We haven't. We're not closed. We haven't closed below. We haven't even gotten below it yet. Today, you've gotten 1586.50 versus 1586.17. So this morning, it hasn't even been able to bust through that low. And Tom also likes to say, if you can't bust them down, you'll try to bust them up. So the game is on the daily basis here to say, okay, it still wants to go test that 1597.35. Look, if it closes above 1597.35 and trades above it here for a week or something like that, as long as it continues to do it on light volume, this market still wants to pull back and test that 200-day moving average, in my opinion. And we'll have to be more than a week that will have to pass where the S&P trades above 1597.35 or what have you, in order for me to really change my opinion on that. But so I've got a longer-term strategy, and a longer term because of certain patterns that are out there that have occurred. Why I say that 2350 is long-term where the S&P wants to trade to. I can't tell you whether that's a year from now or 2 years from now. It's not like 10 years from now, but certainly several years from now, that's where it wants to trade to.
All right, my man. Well, I hope you have a nice, profitable day trading. Hey, how's the weather down there?
Weather's been gorgeous. It's been nice. It's been a nice April. I hope that it's a nice May. We're going to start coming into our summer months out here, and where it gets a little bit toasty in the afternoon.
Yeah, I'm not so sure I want to live in Florida with your summers. Tom always talks about the great weather down there, but I kind of scratched my head and said, I'm not so sure I want to be down there in the summers.
The choice you got to make is, I think if you're going to just stay in one specific spot, is whether or not you're a person that likes, a pair of shorts and a T-shirt and maybe a little bit of sweat, just going in between the house and, your car and someplace else that you're going, or whether you want to have to strap on some thermals and all that type of stuff. So I'll take the shorts and a little bit of sweat.
Between your house and your boat. Sounds good.
Yeah, there you go. All right, Mark. Hey, thanks for calling. I appreciate it.
You take care.
Absolutely. All right, folks. So let's go back and we'll take a look at the let's go back now into the. So really, folks, the key is always getting your head wrapped around what you're thinking, what your time frame that you are trading within or that you are investing within, and you want to make sure that you get that right, because then once you get that right, then it's a matter of, okay, what are the signals? What is it that you're looking for? And that's why I can have a long-term view that says I believe the S&P is going to 2350, and at the same time I can say that on a shorter-term basis than a monthly, if you will, than a longer term, meaning more intermediate term, that what I see is a nice pullback into about that 200-day moving average, maybe even lower. Nothing would be unusual. Nothing would be normal. In fact, if it comes all the way back to the S&P, to December 31st, January 2nd, that level is going to be around 1460 is the high on January 2nd. The low of December 31st is 1426 out there. That'd be nothing more than coming back to a normal breakout area. So there'd be nothing wrong. Question becomes, on your different accounts that you're trading, what's the type of heat? What's your outcome? Where are your stops? And that's really the key. You want to make sure that you have stops in place, no matter what time frame it is that you are trading on. And there's all different types of tools or methodologies, and if you haven't adopted one, you should adopt one. And that way it becomes, you should adopt it now while you're about the most objective that you possibly can be, and you write that down. That's your goal, that's your mission, and when you see that take place, if you don't have it physically in place, make sure that you go ahead and you take your bread off of the table, and you wait for the next sign, the next buying opportunity, what have you. You do not need to be invested in the market 100% of the time in order to make money. Anybody who tells you that, they're full of a lot of lack of information. You thought I was going to say something else, but a lot of lack of information or studying of the stock charts or doing any kind of study out there. They're just folks that want to keep you. They must be making money off your money if that's the advice, in my opinion, that they are communicating to you. It's always easy to find out where the bulls and the bears are hanging out. When you take a look at the candlesticks, they just simply can't hide, and you just have to be paying attention to what's the time frame that you're trading on. You know, we're taking a look at the ES Mini. It was moving down. This is a 10-minute chart that I've gone back to. On the 10-minute chart, we watched it moving down. We've watched it using just simply this relative strength indicator. It's nothing more, nothing less than going to into the hospital and or doing some type of health test and being hooked up to an EKG, something just testing your heartbeat. And that's all that the relative strength indicator really does. It helps you to identify areas where you should be buying from. And again, it depends on your time frame that you're trading, in areas where you want to start to look for where you should be selling from. And the key is always going to be, do you have bulls at your back or bears at your front door out there? In this case here, the bulls at the back on the 10-minute chart finally stepped in. They stepped in while Mark and I were on that call from 10:30 to 10:40. You got a nice bullish engulfing candle right here. That's as if on an intraday trade and coming off this low relative strength indicator out here, you could have taken a long trade right here. You'd have your stop below the low of this session, 1581 and a quarter. It could be a close below it. It could, however it is that you want to trade. And so the bulls on the 10-minute chart absolutely stepped in, just like the bears have stepped in all along through the evening session out here as the highs were being made on a 10-minute chart. You've got this little, bear sash candle right up here as the high was being made at 2:20 in the afternoon. You had the bears actually show up right here with a little evening star formation candle. Again, this is ultra short term, and it helps you to identify where you ought to put stops, where you ought to and trying to understand what the market is doing and the bounces and so forth. Nothing's going to go straight up, nothing's going to go straight down, and you always want to be able to know where the bulls and bears. Maybe 10 minutes is too intra time period for you to be able to trade. Here's a 30-minute chart. You see you got volume moving down at 10 o'clock. Certainly the volume is to the downside. On that 10 o'clock session from 9:30 to 10, 206,000 contracts going into the celebratory party yesterday that had 142,000 contracts to the upside. Where's volume telling you that the market is trading into? The volume is to the downside. You come back here into these trading sessions back here at 9:30 in the morning, 10 o'clock in the morning, April 25th. You've got some volume to the downside as well. But 30-minute chart, without a doubt, we know where the bulls stepped in here to defend their territory, understanding where the war is going on, where the battle is going on right now. And this was making almost a 1 to 1.618, A to B equals CD. Now you got the bulls clearly on the 30-minute chart. Is the 30-minute time frame over? Absolutely not. Doesn't end until 11 a.m. when our man Basil Chapman comes on. So it's easy enough to be able to see these patterns. You have this butterfly pattern out here, being able to come up with a target range of around 1580. You want to understand what the ranges are, and then what you're looking for is the signals and indications from the bulls or the bears with regard to who has control and who's gaining control and where the battles are being fought. So I hope that helps you, and I hope that helps even in my discussion with Mark with regard to understanding from a time frame standpoint what it is that are my current expectations that are out there. So I can be a long-term, very long-term bullish, and I can be intermediate-term bearish out here. And now it's just a matter of really waiting for a shorter-term signal on the daily chart, and that's what Tom is really talking about, which is the swing point high from April 11th, because seeing that get tested and closing back below that on lighter volume constitutes a failure of a swing point. And at the swing point, that's where you're really getting the most amount of information. If the S&P doesn't get over that swing point and yet comes back and closes below So I'm going to put the S&P 500 back up on my chart here. So even if today, tomorrow, whenever, it doesn't get above 1597.35, but once it closes below the swing point low of 1586.17, that too would be a rejection of the swing point. All that we're really saying is as long as you're inside a swing point, you might as well go up and take a look at the high. It's like climbing a mountain and not going ahead and getting up to the peak. It's just not something that you would spend a lot of energy doing. And in this case here, that's really how you would correlate that to what the markets do. You get up to a peak, and you ought to go up to, to the top of the mountain. You might as well go all the way up to the top, stand up there, even if it's just for a brief moment. And then, in this case here, if you're going to create more peaks, you're going to do it with energy. That's all we're saying. If you're going to go to higher highs and it's going to be real, then that's where you're just simply going to be doing it as you get towards the mountain and you get towards one area that might be a peak. You've got enough energy to go up to the next level. Right now, what the markets are doing is they're telling you they don't have the oxygen left in their tanks to actually go higher. And that's why we see the volume to the downside. That's why we see stocks like United Health that's got an island reversal, Procter and Gamble. We do not have a island reversal now in Pfizer, so that one did not take place. But IBM, we've got volume off the top, so all kinds of signals out there. And the bulls in the market can change their mind at any point in time, and they could rush in with all kinds of volume off the sidelines and all kinds of volume into the marketplace. That would change my intermediate term. Doesn't change my long-term view. My long-term view, even on a pullback into the December 31st level, I expect that. So I expect that or a little bit higher. So anyways, let's go take a look at some of these other stocks here, popping and dropping. I had a request to take a look at which stock was it here? Show charts. Let me go over to show tunes on my chart out here. I think it was Bristol Myers Squibb. BMY is the ticker symbol. We've got someone that is short on this equity. This is now trading below these high volume bars. Bristol Myers Squibb, if you're watching us on Tiger TV, you can see two high volume bars without wide price spread. That is on the trading sessions from March the 22nd and March the 25th out here. Two small bodies. Not really typical of what you see when you have volume come into an equity. More typical would be taking a look at, let's say, the candle session inside Bristol Myers out here at the January 24th level. You got volume behind the move, and you've got wide price spread, a wide-ranging bar. Just take a look at that compared to these other smaller-bodied candles. We had the same thing on that next trading session from January 25th. So when you have two small-bodied candles with high volume, it's always hard for me to determine, are those buyers or sellers? Yes, you have to have both buyers and sellers, but who's the one that's really in control? When you get price that closes below, that to me shifts the momentum to the sellers, and that's what we're seeing right now inside Bristol Myers Squibb. As long as this stays underneath the level of 39.80, what this should do is come back to these wider ranging bars down here with the volume in the January 25th, January 24th time frame, around 35.97, maybe 36.71, and then you just apply just some other basic tools to it. If you take a look at retracements from low to high, that means coming off of this high volume low down here that hasn't been tested. That happens to be November the 15th. Then what you'd be taking a look at is a 618 retracement, takes you to 35.31, right inside those two candles. That is where Bristol Myers Squibb is headed to as we speak. Right now, the Dow's off 36. The S&P is down 2. Composite is up 5 points. You've got Apple leading the charge here. Well, I won't say totally leading the charge, but they're up $6.33. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 34 right now. S&P is down 2. Let's take a look at a couple of gold stocks out here. Let's take a look at Rand Gold Resources. Gapping down this morning, has some pretty decent volume behind the move. We've been trading here for an hour and 24 minutes. This gap down with 416,000 shares. Now, the last move up, gap up here, came on April 24th here, 1.4 million shares to the upside. So 1.4 million shares versus 416. Looks like if the volume continues at this pace, we've got volume to the downside. Now, you've got the that large gap down on April 15th, a couple million shares. So Rand Gold may pull back down into this swing point low here of April 17th. That's where you'd get a real release of information. That high is 71.07. You want to see it get down there and test that with less than 1.4 million shares out there. If we take a look at you had Newmont Mining, NEM, out with earnings release here. Let's just go take a look at their numbers, see what they had to say. They did net income here of $354 million versus $578 from the year prior, $2.2 billion versus $2.7 in revenues as well. So they missed the numbers, and what we can see here, Newmont Mining now trading below its April 23rd swing point low. That low was 31.77. 10 million shares on that trading session. Already today we have 7.4 million shares. So Newmont Mining headed much lower. Let's put this on a longer-term time frame out here. Let's go take a look at the weekly chart. And on the weekly chart where this is headed to, let's just draw the line across the sand here. We'll take a look at the swing point low from 2008. Now the top of that, November 21st, 2008, is 29.50. So that looks to be the next stop for Newmont Mining. Again, NEM is the ticker symbol. The volume out there, let me just draw the volume line across my screen here. The volume out there on that candle session is 59 million shares out there. Last week, volume was 51 million shares. The week before was 73 million shares. So ideally, on the weekly chart, you'd get down, you would test the 29.50, you'd close back above it on less than 59 million shares, and that would signal a rejection of that swing point. You close inside 29.50, and just like Mark and I were talking about on the S&P 500, if you close inside a swing point, as long as you're there, you might as well go test the other side of the swing point. In this case here, if it's moving down to the lows, that low out there on Newmont Mining would be 21.17 out here. If we take a look at A to B equals CD patterns on Newmont Mining, our A point is going to be the highs on 11.11.11. How about that for a gold stock? That high is 72.42. Your B point is going to be your swing point low from July 27, 2012, 42.95. Makes a move up. Looks like it's probably about a 0.382 retracement. We'll go measure that in a moment. Your C point is the September 21st high, 57.93. As you can see right now, the 1-to-1 projection takes you to 28.41 and inside that swing point. If we take a look at volume as the B point was crossed, we'll go ahead and we'll put that in black across my screen. That volume low, that volume, I should say, on July 27th is 32 million shares. Let's go see if the B point was crossed with volume, meaning more than 32 million shares, and voila, there it is. February 22nd, 2013, 42 million shares. You've got a confirmed weekly A to B equals CD down. And now, to put it all out here, if we take a look at our retracement, that retracement, about a 50% retracement. That says it's got more energy, and enough energy, quite frankly, to take you all the way down to the lows, the 1.272 A to B equals CD, or the lows of November 21st, 2008. Folks, stay tuned. It is Terrific Tuesday. That means Basil Chapman is up next. After Basil, we've got the options hour from 12 to 1, and Daryl Martin 1 to 2, David White from 2 to 3, Tom O'Brien from 4 to 6. Have a great Tuesday, folks. Look forward to speaking to you and seeing you in the morning.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.